Hello everyone, and welcome to this webinar on merchant standalone batteries. My name is Fernie Flinterman. I'm project manager at Solarplaza and in charge of the Solarplaza Summit Greece happening on the 20th of November in Athens. For those of you who don't know Solarplaza yet, let me quickly introduce us to you. Solarplaza is a global event organizer. We are founded in 2004. We are based in the Netherlands, Rotterdam, and we have hosted over 250 events globally. We have a network of over 60,000 renewable energy professionals joining us at those events. So this webinar is part of the run-up to the Solarplaza Summit Greece. We have an excellent lineup for that an excellent speaker lineup ready for the program. You can view it on our website. For more information, please find it there. And please join us for a great day full of learning and networking in Athens. So before we get started, I have 3 practical notes to share with you. First of all, you have the opportunity to submit your questions to today's presenters. You can do this by typing them into the questions box that's on your screen. You can also use that question box for any technical issues you might encounter today. Our team is here to support you with that. This video will be, or this webinar will be recorded. We will send you the link to the recordings in a couple of days. So today's moderator is Evangelos Gazis. He is market lead for Southeastern Europe at Aurora Energy Research. So welcome, Evangelos. It's a real pleasure to have you lead this webinar today. Let's not wait and let's get started. I wish you all a very good webinar, and Evangelos, the floor is yours.
Many thanks, Franny, and I'm very delighted to be here with a great panel, and also, yeah, very happy to be talking about batteries and discussing with the panel about batteries in Greece. So, yeah, the title of the session today is "What's the Deal with Merchant Standalone Batteries?" So it shouldn't be a surprise to anyone that batteries storage is becoming a very hot market in Greece. It has been for a couple of years now with auctions for CFD supported systems, and it is expected to be over the next few years with the new announcement of a fast track grid connection process for standalone batteries, fully merchant standalone batteries. So there are a lot of market signals, and now Greece is becoming a very hot market across Europe when it comes to batteries. So we are here today to discuss about that. We'll discuss about the commercial viability of projects. We'll be discussing about challenges on the development side, but also on the financing side. Yeah, we have some great speakers to do that today. So I'm joined by Sotiris Kapellos. I'm trying to get to the next slide, but I'm not succeeding. Maybe it takes a little bit of time. Apologies for that. So yes, apologies for that. I will get the right slide. Sotiris Kapellos, COO of HELLENiQ Renewable Energy. He will be presenting and then receiving some questions later on. And we also have Elena Kalogeropoulou, who is an energy trader and business developer at Optimus Energy. Great speakers, great insights expected. So please, throughout the presentations, feel free to post your questions. We'll have a Q&A session at the end, and I will be collecting questions and asking Sotiris, Elena, and I will be happy to answer any questions myself. So yes, please post your questions on the questions panel. So before we go into that, and the first presentation that I will be presenting some outlook, Aurora's latest research on batteries in Greece, I have a poll for you. So I would ask Victor to bring up the poll question, and it's nothing. It's mainly about how you feel about the Greek market. So the question is, what do you expect the total installed capacity of battery storage to be in Greece by 2030? So we have a few options, and I see a few of you have voted already. So yeah, is it going to be less than 3 gigawatts, 3 to 4 gigawatts, 4 to 5 gigawatts, or more than 5 gigawatts? I'll give it maybe another 20 seconds for everyone to respond. Yeah, just a reminder, the target in the latest National Energy and Climate Plan is just over 4 gigawatts. So we have the pessimists and we have the optimists here, and it's quite balanced, which is surprising. So I believe that most people seem to be relatively pessimistic or conservative. So 3 to 4 gigawatts is the winning answer, with about a third of participants thinking that that's where the capacity will land by 2030. And then we have about a quarter of respondents saying less than 3 gigawatts, and another quarter saying 4 to 5. And then we have about 17% saying that it's going to be more than 5 gigawatts. Surprising to see that more than half expect that that target will not be met. Cool, interesting. We'll get back to that. So first, now I would like to spend the next few minutes providing some outlook based on our research at Aurora Energy Research. And yeah, my presentation is yeah, before I go into my presentation, I wanted to provide some context about Aurora Energy Research. Apologies, it's just me trying to get the handle of moving the slides. So for those who don't know Aurora, Aurora Energy Research is the leading provider of energy market analytics, of advisory services and software across Europe and globally, really. So we operate in 17 different offices right now, with more than 900 experts in these offices. And I believe we reached 1,000 people last week. So it's the leading specialist for energy market intelligence and software services. Apologies, Victor, I will have to ask you if you can move to the, I don't know, I cannot seem to be able to get it to the next slide. Okay, thanks. So I would like to start this presentation with a little bit of context on what has happened over the last few years in the market. And the way I usually do this is by looking at what has happened to the demand, but also to prices. So if we look back at 2022, 23, and 24, we can see that the annual demand has grown a little bit since last year, but moderately. So on the other hand, peak demand has grown steadily over the last 3 years and reached 10.7 gigawatts last year. And that is important because that has a direct impact on the volatility of prices. So and the requirement for flexibility in a market. If we now look at prices, and by prices in this case I mean average day-ahead prices, we see that yes, prices have dropped materially or significantly by after 2022 when they reached the peak. But they have settled at levels that are considerably higher than what they used to be back in 2019. So the new normal in the short term seems to be at those levels. If we look at a more granular seasonality of prices, we see at the lower graph, we see that last year was very similar, a little bit lower compared to the year, this year until now, until August, which is the dark orange line, is a little bit lower than last year, but about 8%. The delta is about 8%. So we expect a mild reduction in prices. What are the fundamental drivers here? The main thing is, and that's based on how the system is designed, thermal assets and the marginal cost of thermal assets. So effectively, gas prices and carbon prices play a very important role in the formation of prices still, and are expected to do so in the future, given the way the marginal pricing works in markets across Europe. So gas prices are important, and they are expected to drop materially over the next 5 years, and that is to do with the new liquefaction capacity that is becoming available in Qatar, in the US, in different places across the world, which means that LNG will become more available. We expect the prices for gas to reach a minimum by 2028, more or less, and then steadily grow over time. We're looking at the orange line, which is our central scenario, the latest central scenario. So why are they growing over time? And that's mainly to do with the globalized supply chain for gas, the fact that we have a globalized demand. So China, Japan, there's still quite a lot of demand, or the demand is expected to grow over time, and that will put pressure on prices globally. The picture is quite similar for carbon prices. So growth, but much faster growth of prices in the short term by 2030 because of very high ambition, green ambition. Later on, after 2030, we expect that the growth in carbon prices to slow down, but at levels more than 150 euros per ton of CO2. So that's the view on the market fundamentals and the main costs. So that means that prices will remain high, but also the fact that there will be a lot of volatility. So spreads within the day will become even higher in the future. And that means more appealing business cases for batteries. So if we look at the next slide, what is the target? What is the roadmap for batteries? So as I mentioned, we had a couple of tenders, or 3 tenders actually, that will bring about 0.9 gigawatts of batteries. And this is mostly 2-hour batteries, but also some 4-hour batteries. The first ones are expected to be deployed early next year, or by the end of this year, then we have a call for another 4.7 gigawatts of standalone merchant batteries. 900 megawatts of those will be connected to the distribution system, and another 3.8 to the transmission system. We don't know if all of those 4.7 will be materialized, but the call has a cap of 4.7. Then there are a couple of other incentives for collocated systems in businesses, but also fast track licensing for certain regions in Greece, but also some other minor incentive schemes. Overall, these are expected to support about 7 gigawatts of batteries, which is well above the target of 4.3, which is in the National Energy and Climate Plan. So the question here remains whether all of these will be materialized. So in the next slide, we see, okay, what okay, we saw the ambition, what we expect the pathway to be in the next few years. However, yes, we need to look at the pipeline as well. So at the moment, we have more than 55 gigawatts of batteries that have production licenses, which is the first milestone, really. Half of them, or less than half of them, do not have an environmental permit. So we can count them as less mature projects. And then another 0.9 gigawatts have been successful in the auctions, which means they will not be eligible for this call. So that leaves 28.3 gigawatts of eligible capacity for the final awarded capacity, that is 4.7 for the call. Some of them, and that's the gray box here, some of them will not be able to get financing. They might not be able to secure it. So we have an eligible capacity that is a multiple of the awarded capacity. So a lot of eligible projects, at least I would say 5 times the final awarded capacity. However, a lot of uncertainty still about the auction. By the way, the auction is the deadline for the auction is at the end of this month currently. However, it is very likely that it will get an extension for a month, possibly. So all of these projects will be merchant, so no subsidy, no secure revenues. So what does that mean for their economics? How viable are they? So at Aurora, we've done quite a lot of analysis using our specialized proprietary software, Kronos, and we have modeled different cases of batteries, looking into all their revenue streams, how batteries will dispatch in day-ahead market, intraday market, but also ancillary services, both capacity and energy. And we take into consideration CapEx and OpEx. We try to assess what the internal rate of return will be. So the colors show here different buckets of IRRs. Just be minded that this is an equity-only unlevered pre-tax IRR. And what we see here as light green are IRRs of 9 to 12%. And most of the batteries, on the left we see standalone batteries, most of the batteries here achieve IRRs more than 9%, which are highly investable. There are differences depending on the number of cycles or the duration or the entry year. However, in our central scenario, we see that standalone batteries make their money and achieve an internal rate of return of more than 9%. Although it's not the focus of today, of the session today, but looking at co-located batteries on the right-hand side, we can see that the economics look even better. And we see that, especially for systems that get connected early on next year, and they operate at an optimal cycling, especially assets co-located with solar, can achieve IRRs more than 12%, which is the dark green color here. Obviously, there will be very many differences depending on the relative sizing of the assets and also the capex that a developer can achieve. But the numbers look quite good for early adopters, early entrance to the market. So that concludes my part. Sotiris and Elena will dive deeper in some of those themes. And at this point, I would like to invite Sotiris, Kapellos, Chief Operating Officer at HELLENiQ Renewables, to present his part on the key aspects of merchant standalone batteries in Greece. Many thanks, Dr. Kapellos, for being with us. The floor is yours.
Thank you very much, Evangelos. Hello, everybody. I'm going to my presentation is on the key aspects of merchant standalone batteries, and specifically what I'm going to to show you. There is a delay. Yeah. I'm going to show you a few slides. One is about what's the renewables market evolution in the last 2 years, and what was the evolution of curtailments, and that's why we need batteries. I'm going to show you what's the eligibility, the key points, and the timeline of this program that has been announced by the last ministerial decree of the 4.7 megawatt that Evangelos already showed to you. About the commercial viability of the project structuring, and that what is the better to do with respect to this program, what are the challenges, and of course the conclusions. So starting with the market, we can see here that the RES market in 2024 was 9.7 photovoltaics and 5.4 wind. So in total, we've had 15.1. The previous year in 2023, it was 2 gigawatt less. So it was around 13 gigawatt. And the forecast for 2025 is another 2.8 gigawatt to be added, especially, and the vast majority will be photovoltaics, 12 megawatt photovoltaics. It will be the cumulative installed power and operational power in Greece, and 5.8 wind. So this table shows and explains why we should expect curtailments. And as Evangelos showed in the previous slide, the increase in the consumption is not going so quickly up the way the installed renewables power is being increasing. So we have more production, green production, than the consumption, and hence we have the curtailments. And what have been the curtailments in those 2 years? Last year, we had all year we had a curtailments in all renewables at 3.5%, but more than 5% was attributed, was hit. I mean, PV have been hit, but more than 5%, and less wind because of the profile of the production of wind. Wind is producing also in the night. There are no curtailments during the night, so they are only hit when they produce during the day when the PV is producing at the same time. So wind curtailments would have been less than 3%. And there is also a discrimination, I would say, within the PV population which are connected to the high voltage have much higher, I would say 2 to 3 times higher curtailment than the PVs that they are connected either to the medium voltage or to the lower voltage. And also in 2025, we expect RES average, renewables average curtailment at 8 to 9%. PV will be more than 10%. And again, wind will be lower, and the highest contribution in this curtailment will be to the high voltage connected PV. So what is one way to deal with that is merchant with batteries. There have been 3 options of almost 1 gigawatt that have been awarded to investors in order to be constructed. As Evangelos also mentioned, the first one of those auction batteries are going to be operational in the first Q of 2026. And also there is this ministerial decree that dictates that there will be another 4.7 megawatt merchant batteries that they will not get any subsidization from the state. Now, with respect to the curtailments and this different contribution of curtailments between the low voltage and the high voltage PV, there has been announced that there will be a compensation in order to to split the curtailments more evenly between low and high voltage, but we have not seen this has not been applied yet. We expect this to be applied hopefully towards the end of the year or the next year. Now, about the eligibility of the merchant battery program. The applications that they are eligible to participate in this program, they should have a power of more than 500 kilowatt and the useful capacity of more than 2 hours. They should have the environmental terms approval, and also they should apply either to the TSO or to the DSO for connection terms. They should have the proof of having secured the land that they are going to be installed. Also, they should have a proof of funding, either through a bank loan pre-approval or by own funds. And there is a reference cost of 200,000 euro per megawatt hour. And they should give a security of 200,000 euro per megawatt for the TSO applications, or 550,000 euro per megawatt when they apply to the DSO. And the bank guarantee is for 2 years. The technical requirements are the same that they've been announced for the auctions, and these projects should not also applied they should not have been selected or approved or win in the auctions that have been taken place in the previous time. Okay, now what are the rules with respect to those batteries that they are going to participate in this program? First of all, the bank guarantee will be returned only if the project does not become eligible under this decree. I mean, does not comply with the eligibility criteria that I have shown in the previous slide, or it becomes eligible, but it does not get the grid connection terms, or it receives the grid connection terms, but it does not accept them. Okay, so these are the only how you can get back the bank guarantee. So you are you have to the bank guarantee will be kept by the authorities till one of those 3 criteria is being met. Now, in case, as it has been mentioned, the grid collection offer will be replaced by a performance bank guarantee of the same value as previously, but it's being now renamed to a performance bank guarantee. And the performance bank guarantee will be reduced at 50% at 3 years from the COD, and return 6 years from the COD of the project. So in case of breach of the requirements of the restrictions of the ministerial decree, or if the project is not being completed and connected to the grid 18 months after the grid connection terms approval, then the bank guarantee will be forfeited. And for selected projects, the financial method can change prior to construction, and the projects that the hybrid projects under the 2 categories, which are batteries that they are collocated batteries, or batteries which are collocated but they can also absorb energy from the system, can be eligible by modification of the production license. So these projects can be also eligible by this ministerial decree, but by modification of their production license. And in case the connection of the project is not technically feasible, so they cannot get grid connection terms, then the application is rejected, and the project, the next project is being in the list is being evaluated, and the participation bank guarantee is being returned to the company that has submitted this bank guarantee. Okay, now what is the timeline? The ministerial decree has been published in March, and the submission deadline for the projects that they should apply to the TSO is the end of this month. The initial deadline was the 12th of June. It has been a first extension till the end of this month, and there are rumors there will be a further extension of 1 month, so till the end of October. And for the projects that they are eligible to apply to the DSO, the initial deadline was the 12th of August, and now it is the 13th of September, in the end of this month. So we expect this extension, and the rumors that they are in the market, they say that it will be for 1 month. So what is next? If we say that according to those deadlines, if the deadline is in the end of September, according to the ministerial decree, in mid-October, the TSO and the DSO will publish the list of the applicants in 1.5 months. In another 2 months, there will be a ministry committee to issue the first preliminary priority list, and this priority list is going to be sent to the TSO or the DSO in order to evaluate technically the project. And after in October, we expect the TSO and the DSO, after December, the mid-December, we would expect that the TSO and the DSO would evaluate the applications based on the priority list. So after this, the publication of this list, then the TSO or the DSO will have to issue the grid connection terms. According to our experience, we expect the grid connection terms to be issued the earliest on the 2nd Q of 2026, and after this, the grid connection terms are being issued. Then the project should be, as it has been mentioned before, ready in 18 months, which means on the 4th Q of 2027. And the COD should be accepted 3 months later, so Q1 2028. So if the deadline was in the end of September, then the earliest that we should expect those projects to be in operation would be the beginning of 2028. So the merchant-based viability has been shown beforehand by Evangelos. I think it is opening new market opportunities for Greece. The project structuring, the site selection is very crucial for the project. The closer you are to a connection point, to a substation, the better for the project, for 2 reasons. One, it is one of the criteria in order to be selected for according to this ministerial decree, and the second is you have less connection costs. And also the sizing of the project, whether it will be 2 to 4 hours, is something which is important. It's going to affect the viability of the project. And also, depending on whether you are going to submit to TSO or the DSO, there are different licensing criteria, so it's easier to get the grid connection terms when you apply to the DSO instead of the TSO. Policy changes allow merchant-only business models to speed up the battery storage deployment in Greece. This is good because a new market is being opened, but of course it introduces a greater competition. So the batteries that will be in operation the earliest year will be much more profitable than those that are going to be in operation in the latest years for two reasons. One is that they are going to leverage the low-lying fruits of a new market, and secondly, the prices, according to the forecasts, are better in the earlier years, and they're going to be lower as time goes by. In terms of the site selection, prioritizing locations near congested nodes optimizes energy storage. So if you, where you're going to select this, where the battery is going to be installed, it might have better opportunities for absorbing energy if the location is more congested. And we expect the market participation. There are mixed expectations whether the applications of 4.7 megawatt are going to be met. We've seen the poll beforehand. It's something that we are very curious to see whether the 4.7 limit is going to be met or not. And in case it's not going to be met, there will be another program to be announced in the future in order to meet this number or a bit higher number, which is mentioned in the national plan of Greece. Now, what are the challenges? There are grid access bottlenecks. We have mentioned that there might be projects that they have been selected, but they will not be able to get connection terms if the connection point or the substation is being congested, and so this is one thing to bear in mind. We need a clarification of rules, especially about the merchant program, or the collocation, or the metering and hybridization of the energy systems. There have been questions that they have been sent to the ministry in order to clarify several aspects of the ministerial decree, and these questions have not been answered yet. There are rumors again that they are going to be announced, to be publicized, several answers from these questions till the end of this month, hence the extension of the 13th of September. Let's see if this is going to take place. The energy market participation is not 100% clear. We have, the rules of the energy arbitrage, how it's going to take place, and this is something more or less we know from the market numbers, from the spreads and the dump prices and the lowest prices, the lowest and high prices, but they are not. It's not clear the ancillary services, the FCR, FRR, and mFRR to enhance the market presence. And in terms of the support of the energy storage, when there will be much competition in the market, maybe a capacity remuneration mechanism should be put in place in order to cope with the project's viability. So I conclude with we have the grid challenge solutions. Merchant batteries offer effective solutions to grid stability, lowering of curtailments and energy storage degrees. They enable a smooth integration of the renewable energy sources. The success factors are the location, are the size of the batteries, and the simplified permitting process which is dependent on whether you're submitted to the TSO or the DSO. And there are areas for improvement, a clarification of the participation in the market, and whether there will be remuneration mechanisms in the future when there will be much competition and when the batteries will have a vast amount of batteries in the market. So thank you very much for your attention, and I'm passing to Evangelos again. Thank you.
Many thanks. That was very insightful, and we already have a few questions. We will address them later, but please continue sending questions. We should now move on to Elena, and Elena Kalogeropoulou, an energy trader, business developer. She will give us the other side, the off-taker side, Elena, very happy to have you here. Over to you.
Thank you, Evangelos. Thank you for the introduction, to Solarplaza for the invitation to speak. I will try to focus on what happens once the battery is on the grid and ready to be optimized. And for us, for you that may not know us, I'm happy to have an introduction about our company. Optimus Energy is the largest market access provider in the Greek energy market. We currently represent more than 4.2 gigawatts of renewables, as well as industrial clients that they participate with demand response services in the balancing market. We also offer power purchase agreements to interested buyers and sellers. And of course, the storage optimization, which we will focus on today. So as also Mr. Kapellos pointed out in his presentation, it is no news that the very high renewable penetration in Greece has resulted in many challenges. Of course, it is very positive how Greece has turned to clean energy and trying to leave behind the traditional sources. We see that most of demand in the upcoming years will be probably met entirely or most of by renewables, but the curtailment issue has been very severe. We have also been witnessing these curtailments in our portfolio during the intraday shifts that our team participates in. So it's no news that storage is very much needed. So apart from the obvious, we think that the three key market drivers that make a battery energy storage will make it very successful in the Greek energy market are, first of all, the day-ahead spread, which is presented exceptional compared to other markets in Europe. We see near zero or slightly below zero prices during midday, and we also see some very frequent spikes in other market times. Of course, we think the key driver is the untapped ancillary services market. In Greece, we have very few participants, and there is room for competition. So we believe the first storage assets to be operated will highly benefit from it. If a storage asset would be operational this year and the previous one, we are very confident that the commercial results would be great. And also the TSO activations from the Greek TSO, their approach is rather conservative compared to other markets, which means that there's room for substantial activations. Here is an example. This is the performance of one of our demand response portfolios. So this is an industrial client that participates in the balancing market, and we can already see the potential in revenue. So what I want to highlight here is, first of all, that the months that show some lower revenues are due to asset maintenance, not asset maintenance, the facility is closed or there's a scheduled maintenance going on. What's also important is that these facilities are not built to participate in energy markets. So you can imagine what an asset that is built to respond to market price signals could capture a much higher value and be much more competent in the market. And also it's important to highlight that this is just for the mFRR up and down products, whereas batteries will participate across all markets. Here is a slide that depicts the whole circle, starting from the day-ahead auction and then moving on to ancillary services, continuously trading financially in the intraday auction and the continuous XBit platform, and then also trading and delivering the balancing energy in the end. So this means that the allocation of capacity and the stacking of revenues requires multiple decisions that need to be made and dynamically switch if conditions in the market change. So it's no news that all this operation needs advanced automation techniques, optimization that takes into account and can dynamically re-optimize within the same day. In liquid markets, we see thousands of trades for one asset for one day. And it's important to note that these trades may be financial, but there's one end dispatching position that will be delivered by the asset. So this means that there could be a lot of adjustments that will lead to one final position. So here I also want to, for those of you that may have not followed us, I want to say that we have partnered exclusively with Inspired. They are the top optimizer in Europe. They have a very well recorded track record, and they show their performance results. They are widely trusted, not only across Europe, they are also entering other markets. They will be providing the optimization engine that will take into account for each individual asset their technical requirements as well as the market signals. Of course, this will be the Optimus Energy clients that we will optimize. So we're bringing in together our own market expertise and local base and trading house, which is the largest in the market, and their sophisticated algorithms to provide tailored optimization solutions, which benefit mostly for assets without subsidies. So apart from this, let me wait for the slide to change. Is it going to change? Be patient with me. Okay, I did it. So apart from the optimization scheme that we offer, we also offer tailored commercial agreements to battery asset owners, starting from the more traditional conservative tolling type of agreements that do not have a lot of shares from market participation, to a more balanced scheme that offers a floor as well as a profit from performance, to fully merchant for those of you that have a higher risk appetite and want to capture the best of the market performance. So we are here to connect with everyone that will be operating an asset in the Greek energy market and offer the best solution that meets bankable needs and revenue expectations, as well as your risk strategy. So this concludes my presentation. Thank you very much for your time, and I'm here to stay for some questions with you.
Excellent. Many thanks, Elena. Very insightful. And we do have a few questions. So if I may ask Dr. Kapellos to join us back in this discussion. Actually, I have a first question for you. It's probably a little bit more technical. So it's about securing the land. So Michael is asking, regarding the securing of the land, should the applicants do so through a preliminary contract, or must it be the official leasing or acquisition contract at the application process? Thank you. I don't know if that's something you're aware of.
Yeah, this is one of the questions that we have made to the authorities, because it's not clear. So everybody's doing whatever he feels he deems more important. So it's not clear. I think that a preliminary contract might suffice, but it's something that we cannot be sure. I mean, every investor does whatever he thinks better. So this is what I've said, that there have been many questions. Or about another question is how you prove the funding of the project. It's not clear, because usually banks don't easily give pre-agree loans for a project. You have to have the case. You have to have a real case. I mean, you have to have the connection terms to show the model, everything, in order to get the approved or pre-approved financing. So these are things that they have not been cleared in the rules of the auction, and there have been many questions that they have not been answered. We hope that they're going to be answered till the end of this month, in order to have this extension and apply next month. Sorry for the answer, but this is the reality.
No, that's a very valid response, and I would add that even in market, when it comes to market participation and competition among different asset classes, there is still a lot of uncertainty how the competition from assets that are that are coming through auctions and how they will compete in the market. There are many questions, is what I'm saying, and actually this relates to another question we have from another Michael about banks and lenders, and if they are. So Michael is asking if banks and lenders are providing guarantees, and in what form. Is it a letter of guarantee, and under what terms? And a follow-up question: without accessible means of financing, this priority connection is not attainable, is what Michael is suggesting. Any reflections, Sotiris?
I think I mentioned about the funding, which is not clear again how it's going to be proved. Greek banks, they have decided themselves what they're going to give us a proof of funding, which is nobody knows if that complies with what was in the mind of the lawmaker. So I cannot give a clear answer on that. Yeah, again.
Yeah, no problem. Thanks a lot. This is reflective of the situation here. A lot of uncertainty. Staying on the topic of banks and lenders, maybe one for you, Elena. How do banks respond to these new business models? So there is a lot of uncertainty in revenues, and we're talking about long-term debt provision here. So how do they? Do banks accept PPAs and tolling agreements for debt sizing purposes? Do they discount any upside from the market? Do they require a floor? Are there any insights that you can share?
I believe lenders' view really depend on the specific project and who is their client, the client profile. In general, Greek financing institutions, they tend to be more conservative, meaning they would prefer something with a stable revenue, a long-term contract with stable revenues, and they're just now starting to build a deeper understanding about battery assets could unlock values from market participation. So they're now diving into what a fully merchant battery could actually unlock. The percentage of own funds also really plays a critical role. On our side, we have been approached by clients across the full spectrum. We have seen the ones with the higher risk appetite willing to enter a fully merchant contract. But we have also seen people only interested in guaranteeing a stable income with a floor and a lower share from market participation.
Excellent, good mix it seems. Now there is a question about the price spread. So Lazarus is suggesting that price spread projections show a shrink, and he's asking how the merchant batteries can stand in competition. Maybe I can share some insights, and maybe Elena, you can add any from your perspective. So yes, price spreads are expected, according to Aurora, are expected to drop in the next couple of years, and that is because that is mainly driven by commodity prices and the fact that gas and carbon are expected to drop materially over the next 3 years, as I showed earlier. So expensive hours will be less expensive during the day. But going on, like after 2028, in the 30s, we expect spreads to increase again, and that is to do with more renewables, more solar in the system, and prices becoming cheaper during the day, and that will happen in a faster pace than batteries. So overall, we expect that the spreads, the difference between the highest and the minimum price within a day, will increase over time. Also, by the way, there is a lot of incoming kind of low price instances and high price instances from interconnectors, so that will also add to that effect. Of course, more batteries, more flexibility on the demand side will mean there is competition, and there will be more technology that will be able to absorb low price instances and push prices up and shrink spreads. However, we feel that the spreads will continue to be healthy for batteries, and also the spreads are only one part of the story for batteries. There are ancillary services and other revenue streams, even capacity market, capacity remuneration market revenues in the future that could support the business model for batteries. I don't know, Elena, do you have any reflection on the cannibalization of batteries and the potential for spreads to decrease?
I think you covered my answer exactly. We also feel that first of all, the first ones to go live would be the more profitable ones. Then there should come some market saturation, but the cycle would repeat itself with more renewables coming in. We feel that this would happen, like you mentioned, and more flexibility solutions on ancillary services should play a critical role. So it's not just the day-ahead spread that we're looking into, like you said.
Cool. Thank you very much. We're about to wrap things up, and I will move on to Franny. Just one more technical question, maybe Sotiris knows about it. The merchant law uses a past tense in the application to TSO as an eligibility criteria. Can this be interpreted that application to TSOs must have taken place before the publication of the law? I'm not aware of this, but maybe Dr. Kapellos, you have looked into this.
No, we don't have this. At least the way we interpret the law, no, there is no such limit. So somebody that might apply for connection terms even today could apply for could submit in the end of this month, or if there is an extension, if after the 13th of September is applying for connection terms, then he might be eligible as well. So this is how we interpret the legislation. And of course, you understand that every time you make this kind of extensions, this is not good for those that they have already applied in the first deadline, which is not fair for them, for sure. Okay, so yeah, this is the answer.
Yeah, that's very fair. Many thanks both. I would like to invite Franny at this point to close the webinar. From my side, many thanks.
Perfect. Thank you, Evangelos, for your excellent guidance over the past hours. And indeed, thank you so much, Elena and Sotiris, for sharing your insights with our audience. Very much appreciated. So we will continue this conversation about energy storage, revenues, tolling agreements, and many other topics at our event in Athens on the 20th of November. So there's still a lower pricing available for all of you when you register your ticket. So please make sure you use it in the right period with the right pricing. So we look very much forward to seeing you all in Athens, and we wish you a great day. Thank you so much. Bye-bye.
Bye-bye.
Bye, everyone.
Bye. Thank you.